Katie, what liability issues do you see for directors and officers as a result of COVID-19?
In terms of D&O exposure, several issues come to mind. One exposure, mainly for public companies, is securities class actions or shareholder derivative claims relating to mismanagement or failure to act or failure to disclose material information by officers and directors in response to the COVID-19 outbreak. Another exposure could be liability arising from cybersecurity and privacy issues, given that many employees are now working from home. The failure to protect a company's network could expose the company to cyber attacks, ransom demands, loss of company data, and increase overall exposure for failing to insure against cyber risks. We also see potential exposure based on a company's disclosure or failure to disclose its response to the COVID-19 crisis. To this end, in March, the SEC indicated the company should provide investors and the public with insight regarding their plans for addressing material risks to their business and operations resulting from the coronavirus outbreak. Another potential area that may impact D&O exposure includes civil liability surrounding allegations of breach of contract involving major customers or suppliers, and also loss of liquidity and resulting bankruptcy proceedings. And some of these exposures have already become a reality, as we've seen several securities lawsuits filed in recent months, as well as many reports of data breaches arising from the work-from-home environment.
Jay, how do you think the coronavirus pandemic will affect the D&O insurance market going forward?
So the question is, what impact would we expect the COVID-19 pandemic to have on the D&O market? And it's important to recognize up front that even before the pandemic, the market for D&O insurance had gotten much tighter. Clients have reported back to us that they saw substantial increases in premiums on their renewals. And given both the increase in the number of claims and also an increase in kind of the types of claims that we're expecting to see, we would expect that this market to continue to tighten. And that means both increases in premiums, but also impacts on coverage. And that would include things like limits getting more difficult to obtain, self-insured retentions increasing, as well as certain exclusions potentially being added to policies. Some of those exclusions might look like an exclusion based on communicable diseases, specifically referencing COVID-19. We could also potentially see exclusions related to cyber liability. A number of experts have talked about how cyber risks have increased, oftentimes due to the work-from-home environment, and as a result, you could see insurers trying to limit their exposure on those issues. And so the other thing to recognize is that this is not going to be simply a one-time impact on policy renewals. We would expect to see this tightening continue for the next couple of years as claims work their way through the system.
Brooke, what should insureds do today to avoid potential insurance issues with D&O coverage down the road?
We anticipate that the next renewal cycle will be significantly more demanding than it has been in prior years. As a result, we recommend contacting your broker much earlier than usual to start your renewal process early. You will need to pay particular attention to disclosure requirements as part of your application. Carefully consider what to disclose about risks and potential claims. Once you receive the renewal offer or the new policy, carefully review each term and condition in the policy. There may be mistakes. You want to make sure that what you receive is what you were expecting to receive. With brokers being extremely busy now, it will be very helpful to have your second set of eyes on your policy to review to make sure that you got what you expected to get. What should insureds do if they foresee a potential COVID-19 claim? As a general rule, we recommend that insureds err on the side of providing notice both of actual claims and notice of circumstance when they arise. Don't hesitate to involve your broker or your attorney to help you evaluate which circumstances should consider being tendered to the insurance company. Carefully track the language in your policy, both in terms of dates and timing for notice and the contents of notice, both for notice of claims and notices of circumstance. Each insured should also carefully consider their current coverage position, including consider if you have any coverage for claims in the current year and whether that may impact tendering notice of circumstance for coverage that may be needed down the road. We anticipate that insurers will take a very strict view of prior notice, particularly related to COVID-19 related claims and upcoming policy periods. As a result, we think a little time on the front end will really help maximize your ability to get coverage later.